Hello and welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamoen. In today's episode, we'll be diving into some significant financial news, starting with Equifax's recent earnings results. So let's get right into it. Equifax, listed on the New York Stock Exchange under the ticker symbol EFX, recently posted its quarterly earnings data for the second quarter of 2024. According to a report from Briefing.com, the credit services provider reported earnings per share of $1.82 for the quarter. This figure beat analyst consensus estimates of $1.73 by $0.09. The firm also reported revenue of $1.43 billion during the quarter, compared to analyst estimates of $1.42 billion. Equifax had a return on equity of 19.08% and a net margin of 10.42%. The business's quarterly revenue was up 8.6% compared to the same quarter last year. During the same quarter last year, the business posted earnings per share of 1.71 was. Equifax's stock performance has been notable as well. Shares of Equifax opened at $259.20 on Thursday. The company has a market capitalization of $32.04 billion, a price-to-earnings ratio of 57.73, a price-to-earnings growth ratio of 1.88, and a beta of 1.56. Equifax has a 52-week low of $159.95 and a 52-week high of $275.10 SARs. The company also has a quick ratio and a current ratio of 0.73, along with a debt-to-equity ratio of 1.04. The firm's 50-day moving average stands at 241.74, while the 200-day moving average is 246.62. In addition to its earnings report, Equifax also recently declared a quarterly dividend. Stockholders of record on Friday, May 24th, were paid a dividend of 0.39 per share on Wednesday, June 19th. This represents an annualized dividend of 1.56 and a dividend yield of 0.60%. The ex-dividend date was Thursday, May 23rd. Equifax's dividend payout ratio is currently 34.74%. There has also been some insider trading activity at Equifax. In related news, Chief Executive Officer Mark W. B. Gore sold 58,300 shares of the business's stock in a transaction that occurred on Friday, April 26th. The shares were sold at an average price of $225.45 for a total value of $13,043,735. Following the completion of the transaction, the chief executive officer now owns 109,220 shares of the company's stock, valued at $24,623,649. This sale was disclosed in a legal filing with the Securities and Exchange Commission. In other insider trading news, Director Karen L. Fichuk purchased 415 shares of Equifax in a transaction on Thursday, May 9th. The shares were acquired at an average cost of $238.77 per share, with a total value of $99,089.55. Following the completion of the acquisition, the director now owns 305 shares of the company's stock, valued at $789,134.85. This transaction was disclosed in a document filed with the Securities and Exchange Commission. Insiders sold a total of 83,735 shares of company stock valued at $18,969,282 over the last 90 days. Corporate insiders currently own 1.57% of the company's stock. Several research analysts have also recently commented on Equifax shares. The Goldman Sachs Group dropped their price target on Equifax from $276 to $241 and set a neutral rating for the company in a research report on Friday, April 19th. Needham & Company LLC reiterated a buy rating and issued a 305.0 price target on shares of Equifax in a research report on Thursday, April 18th. Bank of America dropped their price target on Equifax from 300.0 to 255 and set a buy rating for the company in a research report on Friday, April 19th. Robert W. Baird dropped their price target on Equifax from 275 to 260 and set an outperform rating for the company in a research report on Friday, April 19th. Finally, J.P. Morgan Chase & Company dropped their price target on Equifax from 290 to to 233 points and set an overweight rating for the company in a research report on Friday, April 19th. 4 research analysts have rated the stock with a hold rating, and 15 have given a buy rating to the stock. According to data from MarketBeat, the company presently has a consensus rating of moderate buy and an average price target of 270.47 bens. That wraps up our coverage of Equifax's recent earnings results and stock performance. Stay tuned as we continue to bring you more updates and insights into the mortgage and real estate market here in Ontario. Equifax, listed on the New York Stock Exchange under the ticker symbol EFX, has announced its financial results for the quarter ending June 30, 2024. The company reported second quarter revenue of $1,430 billion, reflecting a robust 9% growth. Notably, non-mortgage local currency revenue grew by 13%. In the United States, Equifax's mortgage revenue grew by 4% despite a 13% decline in USIS mortgage credit inquiries. Workforce Solutions saw a 5% revenue increase, driven by a 12% rise in non-mortgage revenue, particularly from a 20% growth in verification services led by Government and Talent Solutions. However, mortgage revenue within Workforce Solutions was down by 12%. USIS, or United States Information Solutions, reported a 7% increase in revenue for the second quarter, with a notable 27% growth in mortgage revenue and a marginal 1% growth in non-mortgage revenue. International revenue also showed impressive growth, up 17% on a reported basis and 28% in local currency terms. Organic local currency revenue growth stood at 12%. Equifax continues to innovate with new products, leveraging the EFX cloud. The company achieved a 12.5% new product vitality index in the second quarter, with 89% of new models and scores built using artificial intelligence and machine learning. This innovation is a key driver behind their growth. The company is maintaining its full year 2024 guidance, with a midpoint expectation for revenue of $5.720 billion, up 8.6%. They also project strong non-mortgage local currency revenue growth of over 10% and adjusted earnings per share of 7.35. Chief Executive Officer Mark W. Begor commented on the results, stating, Equifax had a strong second quarter against our EFX 2026 strategic priorities in a challenging mortgage market, delivering revenue of $1,430 billion, up a strong 9%. EWS verification services revenue was up a very strong 9%, driven by government revenue up 30%. Our U.S. mortgage business grew 4% despite a 13% decline in USIS mortgage credit inquiries. USIS had strong 27% growth in mortgage revenue, with EWS mortgage revenue down 12%, both as expected. He further added, our non-mortgage business, which was about 80% of Equifax revenue in the second quarter, delivered very strong broad-based 13% local currency revenue growth from continued significant new product performance, with a new product vitality index of 12.5% and 89% of new models and scores built using AI and ML. Workforce Solutions delivered very strong 20% non-mortgage verification services revenue growth, led by the Government and Talent Solutions businesses, with 12% overall non-mortgage revenue growth. International delivered strong 12% organic local currency revenue growth, led by Latin America and Europe. USIS non-mortgage revenue growth of 1% was consistent with the first quarter. We expect improving USIS non-mortgage growth in the second half as we complete the full migration of our USIS consumer business to the cloud early this quarter. Equifax remains confident in its long-term growth strategy, projecting an 8 to 12% revenue growth framework that is expected to deliver higher margins and free cash flow. This momentum is supported by their ongoing cloud transformation and new product innovations that leverage data, analytics, and AI capabilities. Equifax, listed on the New York Stock Exchange under the ticker symbol EFX, has released its earnings guidance for the third quarter of 2024. The company anticipates earnings per share to be in the range of 1.75 to 1.85. This is lower than the consensus estimate of 2.01, which might raise some concerns among investors. In terms of revenue, Equifax has provided guidance of $1.4 billion for the third quarter. This also falls short of the consensus revenue estimate of $1.5 billion. The lower-than-expected guidance for both earnings and revenue suggests that the company might be facing some challenges in the upcoming quarter. Despite these lower projections, Equifax remains optimistic about its full-year 2024 earnings guidance. The company has updated its full-year earnings per share guidance to be between $7.22 and $7.47. This range is more optimistic compared to the previous quarters, indicating that Equifax expects to recover and perform better in the latter part of the year. However, the market reacted negatively to the third quarter guidance. On the day of the announcement, Equifax's stock traded down by 2.0%, closing at $259.25. This decline reflects investors' concerns about the company's ability to meet its short-term financial targets. Equifax's stock has shown some volatility over the past year. The company has a 12-month low of $159.95 and a 12-month high of $275.10. With a market capitalization of $32.05 billion, the stock has a price-to-earnings ratio of 58.22, a price-to-earnings growth ratio of 1.84, and a beta of 1.56. These metrics indicate that while the stock is relatively expensive, it also comes with a higher level of risk. The company's financial health appears stable, with a debt-to-equity ratio of 1.04, a current ratio of 0.73, and a quick ratio of 0.73. These ratios suggest that Equifax has a manageable level of debt and sufficient liquidity to meet its short-term obligations. In addition to the earnings guidance, Equifax has also recently declared a quarterly dividend. Stockholders of record on Friday, May 24th, received a dividend of $0.39 per share on Wednesday, June 19th. This represents an annualized dividend of $1.56 and a dividend yield of 0.60%. The company's dividend payout ratio is currently 34.74%, indicating that it is returning a portion of its earnings to shareholders while retaining enough capital for growth. Several analysts have weighed in on Equifax following the release of its third quarter guidance. Wolfe Research initiated coverage on Equifax with an outperform rating and a target price of $275. Meanwhile, Bank of America has lowered its target price from $300 to $255, but maintains a buy rating. The Goldman Sachs Group has also adjusted its target price, decreasing it from 276 to 240 watts, and setting a neutral rating for the company. JP Morgan Chase & Company reduced its target price from 290 to 273, maintaining an overweight rating. Needham & Company LLC reaffirmed its buy rating with a target price of 305 Nightshires. According to data from MarketBeat, the company presently has a consensus rating of moderate buy and an average price target of 270.47. In conclusion, while Equifax's third quarter guidance may have disappointed some investors, the company remains confident in its long-term growth strategy. With ongoing innovations in data, analytics, and artificial intelligence, Equifax aims to overcome short-term challenges and achieve sustained growth. As always, we'll continue to monitor these developments and provide you with the latest insights. That's it for today's episode of the Ontario Mortgage and Real Estate Insights podcast. Thank you for joining me, Steve Hamilton. Stay tuned for more updates and insights in our next episode. Take care.